There's a fraction too much friction. There's a fraction too much friction.
Lots of areas that various traders will be paying attention to. It's a very congested area. There's not a lot of edge for us in here. So this is a big part of adjusting to trading professionally, is like, you don't go short. I'm not going short. And then you see the market move down and you know that the market's trending down. It doesn't matter. That's not your gig to get all the movement. And it just comes with practice. It's like anything. It's like a new muscle. You got to train to think, I don't care about that, because you literally don't. That will be longs exiting, but also late shorts chasing. So we've got a lot of short inventory around here. It's top heavy. So to me, a pretty obvious trade is, hey, let's fade those who want to go long. Better trade would be, imagine all the inexperienced traders who think they're going to be smart, fading those who are buying to get to the upside. So you fade them. So there's the long, and it's nothing to do with the rates going up. So we just come back to basics. The biggest group to get hurt is still sellers. So we just come down to a big chunk of selling inventory here. So this is a DOM that you do not want to participate in. That's the poking machine there. So we just leave that alone. So it's not if the market's moving, and you just wait for the right conditions. And this is why the better you know the types of trades that you're specializing, you avoid getting sucked in playing when you shouldn't be. Okay, so now we start to get into some stuff that I like to participate in, and that is when there's traders getting smacked and we can join in. So we got the market accepting higher and higher prices, so I've gone long. I waited till I started to see business. If you're wondering if I worked off some failures, I'll show you where they are. 1, 2. But importantly, what I did is get in, moved on side, and then got this little cushion. That's very important to be able to get that breathing space. I'll hold through here because we've got a big bunch of shorts with protective orders. You know where they are, they'll be here. Let's see if we can slice through those. Now the market maker's trying to find liquidity, trying to force their hand, see this? So if it doesn't force the hand, I can get out. Let's just go over the downside versus the upside. Which is the easier trade to be in? Remember that trying to find the low-hanging fruit. This, okay, and that went down, or this that just goes vertical and just goes whoosh. If all your trades are like that, and certainly mine are not all like that, but this was the one that could move like that because you could see, you could read what was going on. I didn't know it was going to do that. What I did know, there was a huge amount of selling inventory here, and they can't push it down. But the market's looking seriously ugly, and all you're thinking about is, geez, I'm missing out on the short side. I'm missing out on the short side, right? So that should be the feeling that you're having. But in watching this, you saw what it was like. The spread would move 2 basis points. That's not an easy trade. I know in hindsight it went down, but it wasn't actually an easy trade to experience. This, and that was about as easy as it gets, like in terms of emotional capital. It's just like sport. How do you maximize your efficiency, your mental capital? It's not through sitting in trades that you get offside and sit there for ages.